Okay, traders, good evening. In this video series, I'm going to show you some examples of trading, entries and exits. And as you can see here, we have a Duncan channel, which was also used successfully during the end of 1980s and 1990s by the legendary Turtles. It's a very fascinating system, but it has also a lot of weaknesses. So my target was, as I was fascinated by this trading system, trading it now more than 2 decades, but all the time developing indicators to improve this trading system. But we begin now, first of all, with some traditional price action in combination with this trading system. This trading system is very comfortable for trend followers as well as day traders. As day traders, for example, they can identify a trending period of the market. Let's say, for example, in this era, as you can see that we had here a breakout and the market rallied until this point. And in this period, for example, the traders would have the possibility to be engaged and to take advantage on a daily basis. So we're gonna mark it now this period around here, I think. So I change the color, and we are now on daily time frame, and we go now to 1 hour time frame. And on hourly time frame, it's very interesting now to look at this movement of Nasdaq in shorter time frame. We are in hourly, and as we can see, the market braked out at this level. That means on the daily time frame as also on the hourly. And we see here that the Duncan channel is moving also upside. So this is the lows. And if a trader would be engaged now at this level, let's say here, buying Nasdaq and putting somewhere here, or more aggressively the stop loss here, and trail the stop, they would have the possibility at around 12,200 until 12,700 possible or potential profit of 500 pips. But that's not bad, right? So at this level, for example, we see that the market break out now, and a trader would sell and starts to get engaged short selling. But on the other side, the market broke up and we see the market rose higher, all right? And this is the weakness of this system. That means the reward to risk ratio of this trading system at all is 1 to 3, meaning that out of 100%, we have only a winning ratio of, so I make it better, we make it, clean this one, and we have only around 30% winning ratio, meaning that around 70 of 100 trades have been ended in losing trades, but the number of average winning trades is much more higher, right? Nevertheless, the turtles made with this system, even if their win loss ratio was 30%, they made tremendous profits at around 170 $180 million in about 5 years. The logic behind it is take the breakout of in any market. If the market breaks up, go long, and if the market breaks down, go short and trade as many markets as you can. Sorry. And they have been trading between 20 to 50 markets at all. So as I told you, more than a half of the markets ended in losing trades, while 5 or 10 made all the profits. And that was the logic behind it, to take the major trend, as the average profit was definitely higher than the average losers. Also, the risk money management was phenomenal. The maximum risk per trade, if you use one lot or maximum 12 lots in a market, maximum risk must be between 1 to 3%. And the discipline of the money management helped this system to be legendary. Whatever, it doesn't matter what the system is missing, is or a tool or indicator that is indicating and detecting the wrong or false breakouts, right? We see here. So as you can see in this period, the market, from August the 28th until the beginning of September, the 7th or 8th of September, it was 2 weeks produced. So I would say a lot of false breakouts, and it can cost you money. Why? If you are, for example, short here, you can see that the markets will fall deeper. The first losing part is that the market is going to the opposite side, so you would take them along, but the market breaks down immediately and falls deeper. The second one is that you are missing this very large trade, the continuation of the trend, and this trading system is not detecting it, whether on lower nor on the higher time frames. And I'm going now to show you some examples how we can avoid it. To stay on this time frame, we can, for example, use a very traditional or simple like that. First of all, we see here, if we are using trend lines, then we see here the market is coming down here. Instead of leaving the trade here, we can leave it here. So it's an improvement. The second one is the market is coming down here, and it is a market structure, and that will confuse a lot of people, or to say that's short. And also the fundamentals last year on this time has been negative, so some traders would go short here. Also the market rose and then falls, so at the end their prediction or the estimate was positive, was okay, but the danger was that during these times the market would run a lot of against them. So this question was where to put their stop loss, right? If they would like to put their stop losses here, the trade would be ended so in minus or in losing. Also here and also here, especially here, it was a period where a lot of people started to go long and sucked. The market fell again, and trend lines could be here helping, but it is not necessarily recommendable. Then the second idea is to add a second Donchian channel with 55, and we see that now this part has been eliminating. That means the trader would take the trend here and let it continue. The market rose, but also at this time, so it is no improvement. Then the worst part is here. The market is rising, 22 and 55 trading channel is bullish. So, but at the end, we would leave the trend with only, I think, 20 or 50 points. And from here, the trader would take a bearish trend. The market rose. It was also plus. Then the next part was here, and the market rose down here. It was also alright, but this is the dangerous part, and also this is still the dangerous part. It's not eliminating it. Now we would combine this trending channel with another tool. In this case, I combined the Bollinger Bands with these two channels. The entry rules simple. We must have breakup of all two Donchian channels, and the Bollinger Band must be green. So that means in these parts, as the Bollinger Band turns green, we go short. And the next one is here. We can go short, and in case it becomes red, we can take profit or let the trend run. Also the trades we see, if we are trend trader, we can also make a compromise and a combination. We take a lot, and the lot should take the whole trend as long as possible, while with the other lot we sell and buy. That means partially, right? In this case we buy only, and here we sell. Special point is here. We make a lot of losses because you see the color is changing too much. Then the next part is against here, and it was good profitable. The next part was here, so it is now on the graphic, but in live trading it is very difficult. You never get the same price, as you can see. So also the spreads are very important. On the same time, now the first lot of the trend has been eliminating. We have no trends anymore, but it is a good filter to see that the market is falling, so we do nothing. We know now we have a breakout here, but we have also a breakout here, and this is now the confusion number 2. If we have this situation, what should we do? And there is a lot of room of speculation, and speculation is combined always to emotions, and emotions are the enemy of every trader. Emotions come if you have a structure like this. We see that on the one hand we have a breakdown signal upwards, then on the same time a signal short selling, and the trader doesn't know, but he wants to make money, And so what should we do? On the other hand, the Bollinger Band is becoming green, the market is going higher, and it is not helpful for our emotions. And news, catalysts, a lot of fundamental data are not helpful neither, and they are intensifying also those emotions, and the trader runs crazy, and it is, like a torture. Also, if we could now say this is a support, but this situation comes later, so we don't know it, and we must wait until this situation, and during this time, if we get engaged here, we have missed this area, and this is around 13,000 until 13,400. It's about 400 pips, right? So whatever the average of combination of these two trading indicators, the Duncan and Bollinger, is helpful here, as our success rate is increasing plus 18%. Why plus 18? I have been trading and also backtesting all these systems for many months. I can say more than 5,000 times around in this market, and this was the final number. So it's not an absolute number, it's something degree. So it would increase the success rate of 30% to 48%. So just with another indicator. Now, a next indicator maybe can be helpful. Therefore, I have been creating many indicators to confirm that, and one of these is, as you can see, the Brasco RSI indicator, which is a combination of RSI MACD volume and buying and selling pressure, meaning every time the market is making a false breakout, we have to see now on this indicator, let's say here again, we see that the market makes a breakdown, and if we go down, we see that our indicator is still red, right? But the second indicator, and these are different, and these are two different buy, selling and delta indicators. This one is green, this one is red, and we can see that from this point, as the indicator turns red, the market doesn't go higher anymore, so it's identifying on the same time this breakout. That means if you would decide to buy Nasdaq at this level, but you look at this indicator, we see that the indicator is red. That means it makes no sense to buy Nasdaq at this level. So this level is breakdown. The market comes down. The second indicator, this one here, is green, meaning that the whole time, as long this indicator is green, the market will increase. So with knowing this, we can now make a strategy not in buying and selling, but on our trailing stop. Instead of trading our stop here and to get, so it was the beginning of the trend, right? And this level is our trading stop. Instead of doing this, we can do following. In case that the trend is, or the buy sell pressure is green, but the short-term buy-sell pressure is red, and Bollinger Band is red in an uptrend, right? Because this indicates uptrend, and we see that we have higher highs and higher lows. So this means also this price action is nonsense or is a fake, a bear trap, right? Why? Because all the indicators have to move on the same direction. And now we can say, instead, if my indicator, this one is green, this one is red, the trend is up, but I have a pullback, I put back my stop loss to the previous level. But only this, right? Because in case the market breaks down, we do nothing, we just get out and wait for another long opportunity. Okay? So, and as we can see, the market, the Bollinger Band at this point is becoming green. Our buy-sell pressure is becoming green too. And now here, we can start to buy again until this point. Now again, the same situation. Bollinger Band is red, or is becoming red. And we see that our buy-sell pressure is green. We do nothing. So our stop loss would turn here. At this level, the buy-sell pressure is becoming red. The Bollinger Band is becoming red. But the trend is still up, right? So what do? We take back our stop loss again to the previous level. The market continues. We can buy here again until this level. The market, the Bollinger Band is red. Buy-sell pressure is green. We do nothing. But here at this level, we can react, and the market is already here, right? And then, so we can now put our stop loss here. Then the market makes a breakdown. We could run or we could go short. We don't. The market is short. Bollinger Band is short. Buy-sell pressure is short, but the big buy-sell pressure is green. We do nothing. What do? Our trading stop against here. At this level, we have green, and our stop would be here. Then again, here it's red, it's green. We go only one step back, and you see now that way if you compare now, the blue line is the previous Duncan trend trading. We exit here, but with this method, you see we have been exiting here because we have added two different filters. So it is about 380 pips more than just with one lot, right? And on the same time, we have also been engaging with the second lot, meaning buy, sell, buy, sell, buy, sell, buy, sell. So with just two lots, we have taken the possible potential of the trend, and on the same time we have increased our account partially by buying and taking profit, and the third factor is we avoided all the short trends because in this period the bulls have been very strong. And if we go back now to the daily time frame, we see that on daily time frame we have managed this bull trap very well, and there have been also a lot of bull traps here. We had bull traps here and also bull traps we had here, right? How is Nasdaq moving now? Well, the trend is very healthy. We have higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and we see that the market is trending up to this level. It's around 15,080 at this moment, and on my previous video I told you we are going to 15,200, and conquering that we go to 15,750 and then 16,000. At this level we have to wait and see what will happen, because here we have the low value areas of the market, and if the market doesn't react negatively, as Paul said that well, for next month the interest rates would not be hiked, so the market could reach 16,500, and hopefully we are going that. My first target, and I am somewhere engaged here at around 12,100, I think, still long, is 17,000. And while during this period I know that a lot of traders had big troubles, and there have been a lot of torture and fear and pain. So but these periods are very important for every trader, as they can learn, especially in this hard phases of the market. You can learn a lot of discipline, but you can also create your own trading system to test especially your systems in this periods of the market, right? If we go back, we see every trading system is working here in a trending phase, right? Every trending system is working very nicely. And also there are tools, oscillators, which are working fantastic in sideways market, but not in trending phases. So the idea would be, how can we create a trading system that is fitting all our needs, to tell we are in a sideway, but stay bullish or stay bearish or stay out, right? And this is the reason I have developed many tools. So as I told you, you can go to my Tradingview page and grab also this indicator. So you go to Tradingview, then the DaveBrascoFX, and you can see here, a couple dozens of trading ideas, the current ideas of the markets, over I think 50 pages. So the current one I have been publishing is, for example, Cardano ADA, and you can see here. And the best thing I have to add on Tradingview is, if you publish an idea, it will never be hidden again. You cannot delete it anymore. It stays forever there. So there is no room for manipulation, right? So I make this chart now bigger. You go here, for example, and here you see some buttons, plus and minus, for zooming, right, an idea. And if you zoom this, you see, so the market has been, it is my prediction or my estimate, right, at this point. And then maybe 2 or 3 days again, you come back and then you press this button here, right? So you press this button here, and you see if there is a red color, it means the market is falling. That means selling or short pressure. If the color is green, you see that the market is going higher, right? And you see here, I am the opinion short, the market is going down. So, and if you scroll down, you see here also the fundamentals, why I think the market is going up, right? So another example, Ethereum bulls to target 2100. The same. Now I make it a little bit bigger. So you see I have already, you see in example of Ethereum, I have been making this, I think some weeks ago, and that was at that point, right? And we want to see, yes, I told you we possibly will come down to the maximum support at 1027, then we will have a pullback, and this strong support must pull up the Ethereum upwards, right? So if it does not happen, then Ethereum will bounce on the 1027, comes down, and then we will have a bearish structure. And in case Ethereum takes this route, we must have higher highs and higher lows, and the market will go up. I have also been explaining why, and also fundamentally, you see, also updating. So all the times why I think the market will go up, right? And now we see if I was right, and we see here until this time, yes, I cannot change anymore this idea. So there is no room for manipulation that you can say, oh, you did it after. It is not possible on Tradingview. And we see until this time, well, my idea was right. So my calculation was right. So we went here and we are now on this red line, right? So I expect now that the market will come down to this point. I hope it's going up, but it doesn't matter. As traders, we don't hope, right? So going back now to, let's say, to some other markets, for example, the Japanese yen. And we see here, so I make it a little bit bigger. So as the price was at around 134, so I predicted the market will go higher, and also the updates of the market, every day the market is getting updated. Why I think that the market will, that we will go back to 100, above 150, right? So, and you see also I have marked it here. We will go higher, so based on my estimation, but you are making your own decisions. And we will see if I was right until the time being. I press this button and we see, yes, until now I was also right on the analysis of this market. So as you can see it clearly, right? So exactly as I have been estimating it. So, and nearly 90% of my predictions here I have been testing that have been right. So we go then to Dogecoin. Again, I zoom. So, and it was on May the 8th, Monday on May of May, I have made this prediction that Dogecoin is bullish, will go higher, but the market will come down first of all to bounce this first support, and if you are breaking it, we are going to the major support, and this is the place I would place my stop area, and then we would have this movement, right? So, and as you can see, so this is the movement I am expecting next, and we will see if I was right. And you see I was right. Color red, the market fell as I was predicting it. You see, I done the prediction here, and also here I was expecting, here we would expect a bounce, and as you can see the market fell here and is going up, and I hope now the market will go here. So we don't know it yet, right? So we would take we would see, but based on this now we can create, for example, our own strategy. So how about Dow Jones? My estimation was long on the end of April, and we are now 2 months later, and you see here, yeah, the market is bullish. So the market rose, and it is on the route I have been calculating, and so on. So back again, if you like, you go to DaveBrascoFX, subscribe to my channel, because it has only advantages for you. It doesn't cost you anything, but you get updated any day and every day with the newest market updates, and that way it will help also hopefully your decisions. So have a nice day. Thank you again for your time.